Intermarket analysis is the greatest confluence you can have in your trading. I use it on a daily basis to not only form a bias on where I believe the market is headed towards, but also I use it to execute and take trade ideas and be confident in my trades. This is why I can hold trades for hours without any sign of fear when most traders get fearful after a couple minutes. It's because of these 4 steps I'm going to outline in this video today to take your trading to the next level. Before we get into the video, make sure you guys are following me on Instagram. That's Arkhamtrades. This is where you can find me. So for the first step in intermarket analysis is correlated markets. Correlated markets can be something like the ES and the DXY. These are markets that's correlated to each other, meaning if the ES is going higher, we should expect the DXY to be going lower. This is something that I look at on a daily basis when forming a bias. I'm not only forming a bias on the ES, which is the S&P 500, which could be the US 30, which could be the NASDAQ. I'm not only forming a bias for that, but I'm also forming a bias for the dollar as well and seeing where the dollar is going today. Another correlated market can be GU and EU and the dollar. Since GU and EU are both correlated to the dollar, these are both correlated markets. Meaning if GU is going higher, then the dollar should be going lower. If the dollar is going higher, then GU and EU should be going lower. These are correlated markets. So when you are forming a plan, when you are forming a bias, or even when you're in a trade, let's say I'm in longs here on GU, I don't want to see the dollar also trying to go higher. That can put me in a position to where I may be fearful because the dollar is going higher with GU when that's not supposed to be happening, and I may look to exit my position. But if I'm in a trade on GU and I see the dollar is just tanking and I had already a bearish bias for the dollar, now I'm more confident in my trades and I can hold my positions for a longer period. So this is the first step to intermarket analysis, which is correlated markets. Next is closely correlated markets. So closely correlated markets can be something that I use on a daily basis, which is these are closely correlated markets, meaning that if ES is going higher, I also want to see the NASDAQ and the Dow Jones going higher. This is something that I use on a consistent basis when taking trades on the S&P 500 and US 30. If I'm seeing that the NASDAQ and the US 30 is going higher, this makes me more confident in the ES. I'm holding my trades for a lot longer, and overall, this builds confidence in my trading. While if I see the NASDAQ is tanking, let's say the NASDAQ is tanking, but US 30 is going higher, this could put ES in a position to where it's gonna consolidate. This is what I use on a daily basis to frame my trade ideas on the ES. If NQ and YM are not aligned with each other, I will not place a trade on ES until one of them, quote unquote, gives up the ghost. What does give up the ghost mean? Meaning that if NQ is going lower here, most likely NQ is going lower to find some level of support and then start pushing higher with the Dow Jones. So NQ simply went lower just to find a level of support to then reverse higher with the Dow Jones. And I'm looking at this, right? So I'm seeing NQ tap a level of support and then overall reject it, and the Dow Jones is still going higher. I'm overly confident now that ES is going to continue higher because of that. Or if the Dow Jones was going higher here, only to then find a level of resistance and then start to push lower, which is actually something that happened today, and I took a trade based off today, and I'll show you guys that later. Then I'm looking for shorts on the ES, knowing that this push higher on the Dow Jones was simply a fake move, and Dow Jones has now given up the ghost, and now it's starting to move with the NASDAQ. And since the Dow Jones has given up the ghost, this move higher, I now identify as a fake move higher, and Nasdaq's already dropping, I can now be confident in taking shorts on the ES. I can overly be confident taking shorts on the ES and hold towards my targets. These are closely correlated markets, meaning I can use these markets on the lower time frames for my overall bias and execution, while the ES and the DXY is more of a long-term correlation, meaning if sometimes the ES can go higher and the DXY can go higher as well. Sometimes that can happen, but in the long term, the ES and the dollar are opposite of each other, but you will get some days where the ES and the DXY will go higher. Usually when in that scenario, one of them is gonna give up the ghost, meaning that the dollar could simply just be going higher to then take out liquidity and then drop. Or the same thing could happen with the ES, where it's just going higher to take out liquidity and then drop. Like that, if you see the ES and the dollar both going higher, understand that one of them is a manipulation move, and most likely you don't want to be trading when in those conditions, because that sets up a high resistance liquidity run, meaning that trades are going to take a lot longer to manifest. But these are correlated markets, and these are closely correlated markets. I'd put GU, EU, and dollar in correlated markets as well as closely correlated markets, because since the GU and EU is connected to the dollar, usually you want to see if GU is going higher, the dollar going lower. If EU is going higher, the dollar also going low, as well as they can play in the long term as well. Next thing we have is the SMT divergences. So an SMT divergence is simply a divergence between closely or correlated markets, meaning that, let's say this is the ES, we have a high here, ES takes out this high. Okay, ES takes out that high. Then we have the Nasdaq. Nasdaq comes up and also takes out this high. Okay, Nasdaq also takes out this high. So far, so good. But then we get to the Dow Jones here. We have that high. Dow Jones didn't take out this high. As you can see, Dow Jones didn't take out this high. This high is still intact. This is an SMT divergence. SMT divergences can be if you see, let's say the ES and the Nasdaq take out a high or a low. This can also work for a low, but one of the markets like the Dow Jones doesn't, while the other two does, then this can set up for a strong move lower. Meaning if I was already bearish on the day, my bias was already bearish, and we have highs here, ES takes out this high, Nasdaq takes out this high, but the Dow Jones doesn't, this gives me so much confidence to then be looking for shorts. Most likely in this scenario on the ES, I'd be looking for some type of pullback to then go short with the ES, with the Nasdaq and the Dow Jones going lower. These are SMT divergences, where one correlated market takes out a high or a low, but other correlated markets doesn't. And I will actually show an example of this later today. Then we have the SIC sister, and I'm gonna show an example of this later as well, don't worry. But this is the ES, right? The ES comes up and the ES takes out this high. Okay, the ES takes out that high. Then we have the Nasdaq. The Nasdaq also takes out this high, right? Just like the SMT divergence, right? But then when we get to the Dow Jones is down here, while the ES and the Nasdaq are all the way up here, meaning Dow Jones is in a SIC sister, meaning of all three sisters, the Dow Jones is the weakest. So if I was anticipating to take a trade between these three pairs, I would take a trade on the Dow Jones, because since the Dow Jones is the last, because ES is up here, Nasdaq is all the way up here, but Dow Jones is down here, Dow Jones is the last, meaning the move on the Dow Jones will be a lot larger then the move on the ES and the NASDAQ. And this is actually a trade that I've taken based on many times over and over again. And this is how I can catch big moves and leave runners, is because of the framework of the SIC sister. This also works on Forex. If GU is all the way up here and takes out these highs, but EU is still right here, I'd look to take longs on EU, anticipating EU to have a strong push higher than the GU. And I'll show examples of all of this later on in the video, but these are the 4 things that you want to be focusing on when understanding intermarket analysis, and these are the 4 things that you want to look at every single day for your trades and even before market open, and create a bias based on these things. This is what I use every single day. This stuff works. This is how I can almost predict the marketplace. This is how I can hold trades for a lot longer, because getting that added confidence from other markets. But these are the 4 rules that you want to take note of when understanding intermarket analysis. So let's get into some examples. The first example here is the SIC sister. So we have ES here on the left, which is the S&P 500 futures. Then we have NASDAQ in the middle. And then we have the Dow Jones on the right. As you can see, for the ES, this was high of week. And this is actually a trade that I've taken and I've won on. So these aren't just any random backtext examples. I actually use this stuff. So as you can see, this was high of week. ES come up here and actually almost created equal highs with the high of week. So that's overall confidence that this is liquidity and ES is going to want to take that out. So I already have confirmation from the ES that it wants to go higher and take out this high. Then we have the NASDAQ. As you can see, NASDAQ has already, NASDAQ has already flushed higher. Like this is just, it went way above the high of week. It's 200 points above. So we have confirmation that NASDAQ is all the way above high of week. We have confirmation that ES has a draw on liquidity, meaning ES wants to go to that high of week. A draw on liquidity is essentially where are we at and where are we headed. We have a level of liquidity above us. Most likely price is headed towards that direction. So we have confirmation ES wants to go higher, and we already have confirmation that NASDAQ has already taken out this high of week. So when coming to the Dow Jones, the high of week is all the way up here. Would you look at that? It's all the way up here. So right now we're in a SIC sister where ES is only 10-15 points away from the high of week. NASDAQ has already taken out, but the Dow Jones is all the way down here. Our bias for the day is already bullish. So when choosing between the 3 pairs of which one I'm going to trade, I'm going to choose to trade the Dow Jones, because the Dow Jones has the best opportunity to catch the biggest move out of the ES and the NASDAQ, because the Dow Jones is far lower than the ES and the NASDAQ. So I'm going to play it here. And just like so, Dow Jones rips higher over 280 points. Just like that. And then look at the NASDAQ. NASDAQ also rips higher. And the ES also rips higher as well. This can also be used during bias as well. So if I'm struggling with understanding bias, meaning that I don't know if the market is going to go higher or lower, I'm simply going to look at the 3 markets. So let's say we're back here on the ES, right? we're back here on the ES and the Dow and the NASDAQ, right? So I want to understand, are we going to go higher or are we going to go lower? I see that there's this weekly high here, high of week. And then I'm seeing that NASDAQ already took out that high of week. So my understanding is if NASDAQ has already taken out this high of week, most likely we're in a six sister here, so I can anticipate longs on the ES into this high of week. And this is actually a trade that I did take on the ES, targeting the high of week, based on pretty sure an order block here on the 5 minute. This isn't the true trade, but this was a trade idea, just like so, and it worked out just like so into the high of week. So this was a trade that I did take. This is just a rough draft of it, but I did take longs on this day on Friday, targeting that high of week, because we already know NASDAQ took out that high of week. ES is going to want to take out that high of week, as well as Dow Jones is going to want to also push higher and take out that high of week as well. So my understanding is NASDAQ, we've already had confirmation going higher. ES, we have a draw liquidity higher on the ES. Dow Jones has found support and it's in a six sister, meaning it can see a big move higher, meaning that I can be confident that all three markets are going higher. I can be a lot more confident in my trades and overall leave runners as well, because as you can see, ES did continue pushing higher. So this is the six sister example. Next here we have the SMT divergence. So coming into the market open, some things I want to take note of is ES took out this low. Okay. Dow Jones also took out the low of the day. Okay. But what do we have here? NASDAQ didn't. NASDAQ is up almost 100 points. NASDAQ isn't even making an attempt to go down to this low. So this puts us in a situation to where we can anticipate a SMT divergence, meaning since ES took out this low, Dow Jones took out this low, but NASDAQ didn't. NASDAQ is bullish, and since NASDAQ is bullish, if we can see support being found on the Dow Jones as well, because we already know NASDAQ is bullish, if we can find support here on the Dow Jones to push higher, then I can be confident taking longs on ES, which is exactly what happened. So we came lower on ES, took out this low. I seen Dow Jones also take out this low, but the NASDAQ didn't. So I'm looking for longs on the ES just based off of this premise. So what I'm looking at is a push higher, pullback for continuation. It's that simple. Using other markets as correlation, anticipate a break, retest, and take the trade long. It's really, trading can really be that simple. We have this liquidity sweep down here. Dow Jones also took out the low, but NASDAQ didn't. So I'm anticipating higher prices on the ES based on the SMT divergence that we're getting between the NASDAQ and the Dow Jones. So we get a push higher here. We see a bullish M15 fair value gap. Limit order right here. Take profit just above this high right here. We get a pullback into that fair value gap, and then price comes back up and wicks us in. It can be that simple. This was a trade that I did take. Very, very good. Based on simply just an SMT divergence and a fair value gap. That's it. No standard deviation to the three like none of that. It's just intermarket analysis. Understand your bias, understand your draw, wait for a pullback, and then take the trade in direction of the market. It can be that simple. So this is the SMT divergence. So if you ever see this signature where, you know, the Dow Jones and the ES, or sometimes it can be the NASDAQ and the Dow Jones can take a lower high and the ES doesn't. It goes between all three of them. Sometimes the ES can take a low and the NASDAQ can take a low, but the Dow Jones doesn't. This is why you have to look at all, three markets closely correlated with each other. And, whenever you see this signature, you can be confident in your longs or your shorts if we get an SMT divergence at the highs. So that is an SMT divergence. Next thing we want to look at here is the correlated markets with the ES and the dollar here. As you can see, US dollar index and the S&P 500. So like I mentioned, we want to see the ES go higher. The dollar also has to go lower, and vice versa. As the ES is going lower, the dollar has to be going higher. So this was Thursday CPI, which is a trade that I did take. So as you can see, news came out at 8:30 and the dollar pushed higher here. And we do have a bullish fair value gap here on the dollar. So what I'm anticipating is a push lower into this bullish fair value gap to see a continuation higher. And for the ES, since I know the ES and the dollar is correlated, I'd want to see a break back higher inside the ES to then see a drop lower. And then here we go on the ES. We see this massive drop. I'm gonna go on to M5 here because this is what I traded. Yeah, we took a trade right here at the fair value gap right here. Stop loss just above here for about 3R. Yeah, we got 3R here. It's right here. Price came back up in here. And then we seen the drop lower. And then the dollar here, we see the drop in this M15 fair value gap. And then we see the dollar continue higher, which is around the time that we took this short on the ES. So this is how I can use the dollar for my analysis and for my bias when trading the ES. And here is a trade that I did take this morning off of the short of this M15 or off of the short of this M5 order block here. It's a trade that I took down into this sell side liquidity pool. And the reason why I took this short and I was so confident in this short is because of intermarket analysis. So as you can see here on the NASDAQ, as we opened up, we started pushing lower on the NASDAQ. So my bias was already lower prices on the NASDAQ. NASDAQ is weak. It wants to go lower. But then we look at the Dow Jones, and as market opened, Dow Jones actually rallied. So initially the Dow Jones was rallying while the NASDAQ was pushing lower. So I was waiting for one to, remember what I said, give up the ghost. What I anticipated was the Dow Jones giving up the ghost. I anticipated this move higher being a fake move higher to then induce, essentially trick the retail crowd, because retail traders, they're going long here. They're thinking 3,900, the Dow Jones is going to 4,000, 40,000. They're thinking Dow Jones is gonna rip higher here. They're tricking the retail crowd to then eventually full on reverse on them. So I'm anticipating this move higher on the Dow Jones to be a fake move, to then when we start to see a drop on the Dow Jones with the NASDAQ, then I could take a short on the ES, which is exactly what happened around this time, which is around 10:15, around 10:30. NASDAQ was already dropping and the Dow Jones started to reverse around that 10:15, 10:30. Dow Jones made this steep drop. As Dow Jones made this steep drop and came back into this bearish value gap and rejected, while the ES was coming back into this M5 order block here and rejected, I took a short, and yeah, the rest was history. We ended up taking profits down here, which I will show all trades at the end of the video. But this was a trade that I did take this morning based solely on intermarket analysis. So this is one of my #1 confluences that I use when taking trades, when I'm executing, when I want to be adding onto my positions, or I want to be or I want to be fearful. If I see the NASDAQ going higher but Dow Jones going lower, I'm going to be fearful trading the ES, and most likely would want to trade, the Dow Jones. So use other markets to your advantage. Don't just look at one market and trade price action on that one market. Look at other markets for confluence, and when entering a trade, you're seeing other markets also playing out how you wanted to play out. That can add confidence to your trade, and most likely you can hold a lot longer. And on my Instagram, I'm gonna show you guys, this was let me see, this was that CPI trade. Remember what I told you about when the dollar was going higher but the ES was going lower? This was the pullback to then take the short and scale in. That was a trade there. Then this was a Dow Jones trade based on the SMT divergence, where ES took out this low, NASDAQ also took out this low, but the Dow Jones didn't. You see that? Dow Jones didn't take out that low. We took a long here and we sold above these highs and it ripped higher. And this was the Six Sister trade, where the high of week was right here. Remember that? The high of week was right here. NASDAQ already took out the high of week. Dow Jones was low and was anticipating going higher prices, so we took longs here on the ES inside this M5 fair value gap into the high of week on the ES, and eventually it continued ripping higher. And this was the trade today. Remember what I just showed you guys? So we took the trade inside of this M5 order block based off of the Dow Jones giving up the ghost, and then we scaled in. So this is why I'm able to scale into my positions, because I'm getting confidence when I see the Dow Jones start to fail and move lower with the NASDAQ. I can scale into my position, gaining confidence on my trades, and then we eventually took it out on the sell side liquidity. So this isn't just a video where I'm just, showing you guys, hindsight studies. Like, this is actually what I use. This is actually what I've, I wouldn't say mastered, because the only person that can really master this is ICT, but this is something I use on a daily basis that I have gotten really, really good off of. And this is a video that I want to share with you guys to help improve you guys' trading as well. So that's going to be it for the video. Hope you guys enjoy. I'm Arkham. Be safe.